Traders, hi. 31st of July, Thursday afternoon, 20 minutes remaining for the market to close. The US India trade talks, the percentages, the negotiations, the numbers, the reactions are mostly out. And I thought that let's quickly take a look at the Nifty, maybe few sectoral charts also, and try and figure out what is the price trying to tell us. So here we have the Nifty spot on the daily time frame. We still are trading above that particular zone area, which in the past had acted as a pretty good support. You remember this. This is a little above that 24,600. Let's zoom in. And it's been bouncing back. All right, not bad, but it's not good enough. Well, 2 days back, you had 140 points bounce back. I'm going to change my Heikin Ashi to candles so that you can remember and identify the bullish engulfing pattern. That was 2 days back. Yesterday was more like a consolidation. Today, you open weak, you bounce back very well, and then as you come towards the close, you're slipping. You're giving away almost 50% of the from the day's high. And so this has created, let's say, a 4-day kind of a wide range-bound price action. The underlying trend is still very much down. The momentum is still down. State of flow, the indication from my next price indicator is also suggesting it's still a weak market. But it's trying. It's trying to form some kind of a base. Maybe do I have enough confirmation? Moving back to my usual Heikin Ashi charts, which I use as a sign of confirmation of the reversal as well as continuation of trend. Yesterday was not bad, but today it is an Heikin Ashi candle which has both the shadows. It has an okay of a body. If you take a ratio between the size of the body and the size of the entire range, means the size of the shadows and the size of the body are more or less same. It's telling me friction, noise, indecisiveness, volatility, choppiness, which is good because unless lows are broken, unless stop losses are hit, markets will not bottom out, right? So there's going to be friction. In the last 2 days, there was a little bit of a sign, and we will consider this little bit of sign as a sign of selling slowdown, but not enough sign for a trend reversal. The basic thing that I would be looking out for tomorrow's trade, that's the last day of the week, that is, can the market scale above today's high? Or because I have an outside bar today, higher high and a lower low, where do I land up on Friday close? Do I go above Thursday's high or Thursday's low, or do I create an inside bar? For all you know, we can have a further consolidation. So stay careful, stay cautious. Strategically, you should not be looking out for long trades left, right, and center. And so the question comes to my mind, is there any sectoral charts which is showing strength? Are there any, let's say, the top 20 names of Nifty 50? Are there any stocks there? So rather than going to the stocks, we can take a look at few of these sectoral charts and try and figure out, are there any strength? So straight, it's the CNX Pharma, the healthcare, which is completely different behavior-wise, completely different from the rest of the entire market sectoral charts. This is the pack where the maximum amount of relative strength lies. All right, fine, no problem. But that doesn't add a lot of weightage to the market. What adds a lot of weightage to the market are the banks, the financials, the IT. And over here, Bank Nifty, no, not really, still struggling. I'm going to take a look at the trend. I'm going to take a look at my state of flow, momentum. I'm going to take a look at the Heikin Ashi behavior. Similar story, downtrend, struggling, not to fall, volatility, choppiness, range expansion. Same readings over here. So no, Bank Nifty, it's not happening there. What about the PSU Banks? PSU Banks, negative Heikin. I don't have any signs of bottoming out there either. When you talk about banks, you have to take a look at the private banks that enjoys the maximum weightage. Here also, not really. CNX Finance is important, barring the banking names. This, however, is still, I would say, a bit more range bound than the Bank Nifty, and we might get some pockets of strength non-banking pack, maybe, but is it strong? No. The only strength that we have seen so far is the pharma. IT is really beaten down, deeply oversold. Most of the charts are behaving like this, down. You need a bounce back, and that will be a mere bounce back. It might support the Nifty, but I don't think that's going to be enough for the reversal. So the banks, the financials and IT not happening, which means that we have to now look at energy and autos and metals. And in most of these cases, I don't see any significant sign of in the CNX energy or the auto. Now, auto can be interesting because auto has been range bound for quite some time. And if you take a look at the top 3-4 names which makes up the CNX auto pack, especially within the four-wheelers, you will see a couple of names. We are waiting for that breakout, but it's been range bound for quite some time. If the Nifty sustains well, we might get a breakout from those names. So none of these actually, to be honest, are showing any signs of bottoming out. Definitely, erstwhile big movers like the defense, which had a very good run up on the upside in the last few quarters, is giving you a meaningful, downside correction. But are there any signs of bottoming out? Not yet. Hopefully, we'll get them in the next few days, and that might give us a short-term bounce back at least. So strategically, what I would suggest is, stay very selectively bullish, careful. This is not a bullish market. It's going to be a difficult market. July was difficult. I hope August will not be that difficult with the new contracts coming up from tomorrow. Stay selectively bullish. Expect volatility, noise to stay, and try and find opportunities which comes with the least possible risk. Wait for the right opportunity. Looking at the market behavior, and of course, we will take a look at how it behaves in the next few days. I sense that we might get a quick, short-term opportunity on the upside. Let's see. If it comes from here, we might get a bounce back. On the other hand, on the flip side, if the sell-off continues, then if these 24,600, 500 levels are broken, I think the market will fall very easily sub 24,000. In that case, we'll look then below 24K for some possibility of bounce back. But as of now, stay selective, stay cautious, and wait for the opportunities. Trade well.